another episode of Cafecito Money Talk, the segment where we empower your financial future starting today. I'm really excited because today we have some very special guests. Some of the young guns here at Power Financial, big hitters, dressed really snazzy, a lot more snazzier than me. Gentlemen, would you like to go ahead and introduce yourselves?
How are you? My name is Joshua Mendez. I'm a personal service advisor at the Sheridan branch.
Hi everyone, my name is James Parker, mortgage loan originator for Broward and Palm Beach counties.
Morning, Carlos Carvajal, mortgage loan originator for Miami-Dade County.
And as always, I'm your host, Pedro Campa. And you can tell by these gentlemen's titles, you get an idea of what the topic's going to be. And the topic is on buying and owning a home. Now, I don't want to, get anybody riled up, but I know it's a loaded topic, but we're gonna keep it simple and try to make it so the process is seamless. So let's get right into it. I have to tell you guys that I don't know anything about buying a home. I've never owned a home. I'm not even sure I'll be able to own a home given my student loans and crushing interest rates. So, but I'm gonna just go out there and ask, what should a person like me start doing, planning, and maybe budgeting for to be able to hopefully one day buy a home?
I would say the main thing you're going to want to do to start is get a pen and paper and just write out your current expenses. So things like student loans that you might not think of when you're planning your money up front. You want to be able to see what your situation is now, and then you're going to have something to compare to when we actually get you pre-approved to buy the home. So you're going to have things that you can plan for and things that you can't. So you want to make sure you're giving yourself a little bit of room. But if there are any tweaks that you need to make to your current bills, then we're going to be able to identify those, and you'll have a little bit of time to work on them.
So basically, you're pretty much forming your budget and see where you have, I guess, disposable income to be able to jump into the process. Exactly. Now, let me ask: is there a minimum somebody should have in disposable income to maybe, I guess, put down on a down payment on a home?
Well, everyone's situation is going to be unique, and really the best thing to do is to come into our financial branch, speak with either James or I, and then we'll go ahead and we'll look at your global and really help you guide you through that process.
Okay, so there's really no minimum. It's really relative to every person's situation. But what things should I account for in the budget for buying a home?
Well, the three things you need to consider when purchasing a home. Credit. We look at the past performance as an indicator of future. Assets, which will be your down payment and closing costs, and then income, your ability to repay that mortgage.
Oh, okay. So, you did mention credit. Now, I'd like to ask, and the floor is open to anybody to answer, is how big of a role does credit play in this process? Because, I mean, do you have to have a high credit score? Can somebody with a lower credit score still be able to?
It depends. Every situation is different, but the better credit score means lower rate, which means lower monthly payment. So credit score is a big factor. We do see if you have any late payments on previous loans you've had in the past, and your credit score is it's another indicator whether you will be a risk to us or not.
Oh, okay. And I'm getting the vibe, like on the last segment we did it on buying a car, and it's almost starting to feel like the both situations are similar. So let me ask you this: in the same way that you could pre-approve, because I learned that pre-approval is a very good first step in buying a car, because then you go into the dealership knowing better equipped to buy the vehicle. Is that true for buying a home? Is there pre-approval for mortgages?
Yeah, pre-approval is definitely the first step, because you see how much you are looking for and what areas you could look for to see how much you're approved for and how much you qualify for. So that all depends on all different factors within your credit score, your work history, you're going to have a good income, and all those things. So the pre-approval process is definitely the first step.
What about somebody, again, kind of touching on somebody maybe has a lower lower credit score rating, would they still be able to?
We'll still be able to work with them even if they do not qualify with their credit score. We can help them, give them tips and ways they can improve their credit score. So once the time comes, we can get the pre-approval process going, and we can get them approved for their new home.
So that's to say nobody's left out in this process. If you want it, you have the options
Yes.
available, and it sounded like I guess we could provide that help for them. So, all right, that seems like a pretty good starting point. So now what are the steps? You're prepared. You have a budget. Maybe you looked into the hopefully you did do pre-approved on the mortgage, get pre-approval on the mortgage. What would you guys say is the next step?
I would say the next step really is to be able to purchase the home is to find a good real estate agent. This can be someone that you want it to be someone that you know and that you trust. If you don't know one personally, we're happy to give you a referral for someone we've worked with in the past. Your friends and family members are great referral sources as well for a realtor that you can trust. The realtor is going to play a major part in you being able to purchase your home. So they're going to be the one going with you to the listings. They're going to be the ones helping you to make the offer and negotiate for the home. So you want to make sure that's someone that you feel comfortable with and you have confidence in, because they're going to be as big a part on your purchase as we are with the financing.
So it sounds like they play a pretty big role in the whole process. And yeah, I guess having a referral works because there's just so many pressures that come with looking up just any real estate agent online or just walking into a real estate office because you feel like you're going to get upsold and maybe you're not going to get what you want, or you're going to end up with maybe a home you didn't really want. And of course you want to be comfortable in making a decision, confident more than anything that this is the right purchase, especially something as big as a house. It's probably the biggest purchase you can make. So now you choose your real estate agent, and that's pretty much most of the process, right? That's pretty much all there is to it. So I go to my real estate agent, I give her my down payment, give my keys, move in. That's all there is to it, right? Please tell me that's all there is to it.
That would be nice, but no.
Unfortunately, it's not so simple as that. Once you and your realtor have identified the perfect home for you, the next step is to submit an offer. Once that offer is accepted by the seller, we go ahead and we move forward with ordering title, the appraisal, perform your own due diligence, which would be the home inspection period.
How long, I'm not sure if you mentioned this earlier, how long does that process typically take?
In South Florida, the typical purchase cycle from offer to close is between 30 and 45 days.
It does sound like a lot, but then again, the things that you mentioned, I guess, do justify the wait. But it's just, oh man, I just want to get in that home as soon as possible.
It's going to go fast.
Yeah, but if you're gonna do it, you want to do it right. At the end of the day, so let me ask this, I guess, in a different area. For the people out there, definitely not me because I don't have a home, but for the people who do have a home that aren't ready to buy a home, what options are there for those individuals?
An option is a home equity line of credit.
What's a home equity line of credit?
Home equity line of credit is the value of your home minus whatever you owe. So depending on that amount, whether you owe or not, you could get a loan against your home.
Oh, okay.
So with that, usually most members come in, they do it. They home improvements is what they usually do. It's your home is your biggest asset, so you want to get the impact windows, fix the roof, fix the driveway. You want to have your home at its peak value. So then again, it's not only for home improvements. There are other things you could do. Maybe pay off a car, buy your son a new car. You just went into college, things like that. So it's not just one specific thing you could do with it.
The process, how long would you say it takes? I mean, hopefully it's not 32 to 40 days, right?
No, it's around half of 15 to 30 days. It usually takes 2 to 4 weeks.
Yeah, that's not bad, I
No.
guess. So it's simple enough. You want to, and it's the move to make because you want to increase the value of your home because values are just shooting up in Florida left and right. So it's the go-to thing to do. So,
One thing I'd also like to say is when you're going to buy your home, you're doing everything that you can to make the purchase. So you're scraping to put money down, you've already organized your bills, so you're making sure that everything's in order for when you buy it. Once you've actually purchased it, you're putting your hard-earned money into it. To go off of Josh's point, you want to be able to use your home as a tool to not only be able to increase its value, but to be able to help you increase your situation overall. So if you have a home where the value has built up, something like an equity line is great to be able to do home improvements. You can keep low payments. If you find yourself overwhelmed or you see a situation where you might get overwhelmed, you can also use your home in a cash out refinance situation, which means we do one new loan, you pay off all of your bills, give you extra cash for emergencies or whatever hardships you're facing, and it gives you the chance to have just one low monthly payment. So regardless of the route that you go, an equity line or a mortgage, you really want to make the home work for you, and that's something that we're trained to do.
so in that cash out refinancing, is that like I'm guessing is it a larger sum than you would from a HELOC? I mean, home equity line of credit.
Typically it's larger, and it's something that you want to have for more of a long-term plan. If you only need to borrow a smaller dollar amount of money, or you only need to borrow it for a very short time frame, then an equity line is a great option. The equity line is going to be faster to close, and it's going to give you the chance to just make payments on that smaller amount. But using the refinance as an option can give you the chance to get everything under one payment, and it's more of a long-term solution.
Okay, that sounds pretty good. Guys, you guys made some great points. The information you guys provided, excellent. I am going to have to close it right there. We ran out of time today. So I'd like to thank each and every one of you guys for coming in today. I'd like to thank the viewers for tuning in. Thank you so much. If you have any questions in regards to today's topic, feel free to email us or comment down below. If you're on the YouTube platform, feel free to subscribe, hit like, and comment. And if you have any questions in regards to any topics within the financial industry, be sure to ask us too. That's what we're here for, to empower your financial future. So with that being said, I've been your host, Pedro Campa.
James Parker.
Carlos Carvajal.
Joshua Mendez.
And this has been Cafecito Money Talk. Thank you.
Bye guys.
Bye.